Hi everyone, welcome to Money from Cash. So the stock market is now going into bearish territory, which means that the majority of the stocks will be going down more often than going up. So right now it's a mess. Everything has dropped in value. So if you were invested a few months back or maybe even years back, you might have given all your gains in your stocks back to the market. So because of that, we want to take a look at one of the strategies that we took and applied back in October on Bristol-Myers. Bristol-Myers is a biotech company, and back in October we saw in our research that there's 3 FDA events coming up in the fourth quarter and also the first quarter of 2019. These are all cancer-related drugs, and these events are great because if during this event that it shows promising results and efficacy to the FDA, then the stock will most likely continue to go higher. But then for that particular event, if the results are not promising, then the company will tank. Many times a $60 stock will go to $6 or $2 or even 60 cents. So these are binary events, high reward, but also high risk. So how do you play this? The way we did this was we applied our safety strategy. If you had just used stock, let's go over there and see. Well, before we go over there, this is our strategy. On October 5th, when BMY, Bristol-Myers was trading around $62, we enter our safety strategy so that we can obtain unlimited gain. So if the stock went from 62 to 70, we made $8 per share. But then to guarantee against losses, the safety strategy actually limits our losses to $2.72 per share, which means had Bristol-Myers gone to zero because of an unfavorable demonstration of the results, if it had went to zero, if you had just bought the stock at 62 and Bristol-Myers went to zero, you just lost $62 per share. But with our strategy, even when Bristol-Myers went to zero from 62, the maximum loss that we had incurred is only limited to $2.72. It's crazy, right? So this is a high risk, limited risk. High reward, limited loss strategy. And this is very important because if we don't limit our losses, you could be out of the game. So if you only had $62 to play and Bristol-Myers went to zero, you're just out of the game. Whereas in our safety strategy, if we bought Bristol-Myers at 62 and applied this strategy, and Bristol-Myers had went to zero, the maximum that we would lose is only $2.72. All right? And then we can get out of that trade. So let's take a look at Bristol-Myers on the chart. This is daily chart, BMY, Bristol-Myers Squibb company, biotech. So the way to look at this chart here is the time horizon by months is down here. So this is October 2018. So this is 2017. 2018 comes in March, May, July of 2018, September. This is the price. So $44, $46 per share. So today is $62.39, and the date on the very bottom is September 28th, 2018. So when we were looking at this before we entered the position, what we discovered, what we saw was that it had put in a support back in April of around $50. Okay, and we have also noticed that it's going in an uptrend. So you notice that, so these lines that we're drawing is all approximate, right? So it's not exact. So you notice that the blue line, which is the stock price action, always gravitates back to this green line. But once it does, it always shows up above the green line, meaning that it's going in an uptrend, right? And this green line is showing support for the stock. So for instance, at this particular point, 55.90 on July 23rd, it was the support, pushing it up, came back down here, now it's support here, pushing it up, and it's chucking along up here. All right, so that's when we, in October, is when we decided to take a position in Bristol-Myers. So going back to our article, unfortunately, on October 22nd, when did we take the position? On the 5th, right? So like 3 weeks later, Citi downgraded Bristol-Myers from a buy to a neutral, and taking the stock from 62, basically it just dropped like a waterfall from 63.70 all the way down to 50.88 in 1, 2, 3, 4, maybe a week's time. That's what it looks like. So if you had bought up here at 62, 63, you just lost $12. Yeah, but for us, we also bought 62, 63 area, but we only lose no more than 272. All right, so coming back to the chart here, so September, let's move forward in time. Boom, right there. That's when, approximately when Citi downgraded Bristol-Myers from a buy to a neutral, and the stock went below this support line. So the low point was 48. So if you had bought at 63, now at 68, without seeing the rest of this, you may be panicking and you might be selling your shares, you know, afraid that it might go to zero. But for us, we got in around here, 62, because we have applied the safety strategy. We're not concerned because it doesn't matter how low it will fall. We're limiting our losses to only $2.72. Okay, so this guy bounce. So if you have sold here, you're probably regretting right now because from 48 it went back to 54. Maybe at this point you might say, hey, it might come back to 63, so you're gonna buy some more. Then it dropped again, and it took you for a ride there. So today we're around $50, $51, $50.91 at the end of the year. What we notice right now is we see another line of support approximately at 48.70, and yeah. So the other thing we notice here is actually in line this guy. You saw some consolidation back here, some resistance. So around this level there might be a little resistance here for us for when this guy comes back. So when Citi downgraded this, they sold their shares, everybody sold, Now they're coming back in and playing again, so they can make some money. So we mentioned that we got in around 62. Max loss is up to $2.71. Let's take a look at our account. So this is our life account, Bristol-Myers Squibb. Our cost basis, we bought at $62.39, so it cost us $6,238.94. We bought 100 shares. The value right now is only $50.94 per share. So a drop of, for 100 shares, is we just lost $1,000, $1,100, or 18%. So that's not good if you only had stock. But remember, we used the safety strategy, so we actually recouped $800 with the safety strategy. Actually, if we had exited yesterday, we had $1,000 credit, so we only lost yesterday. We only lost $144.94. Today we lost what's that? About 200 something dollars. But regardless, we will not lose more than $272 or $2.72 per share. All right, so that's the safety strategy. Where is this guy going to go? Up or down? Who knows, right? Because in February, around this area, they're going to announce their other results, which is what? The CM227, these two drugs for skin cancers. If the studies were positive and they have achieved efficacy, and this might go up. But then if these two studies are ineffective, or it doesn't do anything, then we might see a lower stock price. For us, it doesn't matter to us. We already know how much we can lose, which is 272, regardless if it goes down, to zero. Now, if it goes back up to beyond $62, then dollar for dollar, we're gonna make in profits. All right. So that's the beauty of the safety strategy. One thing we need to say here is the disclaimer: we're not financial advisors, and we're not providing any financial advice. So remember that. Everything we have said, everything presented, everything we blogged is for entertainment purposes only. No one can predict the future. We're not giving any advice, so hope this had entertained you. But if you're interested in learning more about our limited risk strategy and possibly one-on-one coaching, please use the contact form and let us know. All right. Until then, this is Money from Cash, putting your idle cash to work. All right. Talk to you next time. Remember to subscribe and like, and also share with your friends, especially if your friends are losing money in the stock market right now. So our limited risk strategy will help them, especially when the CNBCs and the MSNBCs have already declared that we're going into a bear market, which means more stocks are going to go down than up. And with our strategy, you're protected, and you can be in the game when the bear market turns back to a bull market. All right, hope you're entertained. Subscribe and like, share. Thank you.